Welcome to another episode. Forgot my hat. My lucky hat can't get on without my. Welcome to another episode of the First Fruit Stock Club. Yes. All right, before we begin, let's do the disclaimer. So, the information provided in the First Fruit Stock Club is for educational and informational purposes only and should not be considered financial investment, tax, or legal advice. The views expressed by the hosts and guests are their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk. They carry risk, okay? Investing in stocks carry risk, including potential loss of principal. Past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. The First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. All right, here we go. All right, so look, I have a show for you guys today. Thank you for giving me a few moments of your time. I know how valuable your time is. So I hope to bring some value to you and your family, financial value, right? We all need financial value. We all need to take our finances to the next level. Excuse me. So, so today's show topic is financial pressure. Once again, financial pressure, right? So we all have to work in this system, right? In this financial system. And this system will put pressure on you and your family, right? Definitely will put pressure on you, financial pressure, right? We start out, with our salaries and we have some cushion, right? And then we purchase things, right? Such as cars, a house, anything that usually has a, a 5 year to 30-year timeline on paying these things back, right? And what happens is that we don't account for the economy and the things that will happen, right? We don't account for that. We don't account for inflation. We don't account for what I call the financial bully, right? The bully, uh, which is an increase of prices, which is inflation. The bully of taxes, which is, things. We need our roads. We need new lights. We need upgrades in our schools. Our taxes will go up, right? And then recession. We have an elastic economy, and sometimes the economy stretches out too far. Therefore, the economy will come back down to earth. But we expect, right? And everything's about expectations. We expect that the way we started out is the way it's always going to be, right? And with those expectations, when they change, that's when we get financial pressure, right? We can feel it, not being able to pay your bills, not being able to do some of the things that you were able to do initially, and things change financially in the economy. So those because of that puts financial pressure on you. But of course, I'm here every week to tell you that to promote opening up a brokerage account, and that can relieve financial pressure on you and your family, right? Right? Because when we when money gets tight, you know, the household is not happy, right? Mama is not happy. All right. So we want to always build space, right? We always want to build profit. We always want to build margin, right, in our finances. Okay. And when we build this margin, this buffer in our finances, we're more okay about what happens in the economy. Okay. And that's so important, right? Financial stress is a real thing. It's a big deal. Okay. And can cause health problems. Stress in general does it. Financial stress is just another thing that can create that stress in your house and in your in your life and your lifestyle, especially if you can't do the basic things like you're boxed in. The things you used to be able to do, you can't do them now, right? So we don't ever want to be in that position. That's why I've always been an investor. I've always first invested in real estate. Now I invest solely in the stock market, and I'm always looking for new areas to invest in. But the stock market is liquid, and man, you can match it. And I recently did this. You can match your salary with dividend. I make just the same amount of money in dividend income every month that I receive in regards to my salary, right? And then when I put options on top of that, I explode my income, wear my salary out, right? And I just use my salary just to put more, to create more margin, right? To create more dividend income, right? And what I'm going to do, and I've been working on this. I'm creating a free um, club, okay? Free information, and I'll have a strategy that anybody can use, right? And it'll be free to you. I'll get on there and I'll create it free, and it'll be a Discord. Come in, I'll put the strategy out. I'll be on there every once in a while. Probably won't be every week, but I'll be on there every once in a while, and but I'll have the strategy there, and you can decide whether to move forward or not. It'll be totally free, 100% free. Okay, and I'll give you updates on that. But guys, we have to relieve the financial pressure, and the number one way to do that, man, the name of this show is the first fruits principle, right? See, what happens is the reason why this this economy is able to put pressure on you because you don't follow the first fruits principle. And it is the foundation, okay? It should be the foundation of your household and your family. When you give the economy access to your first dollars, rather, like I said, you have a car, whatever you're financing or credit cards, whatever, when you begin to spend so much that it takes over those first dollars when you get, because everyone's, most people work or paid tomorrow, will be paid Friday. And if you're not thinking about funding your brokerage account first and giving first, you're always going to be behind and you will be financially bullied. Okay? You'll be financially bullied. First fruits. Understanding the first fruits principle relieves your household of stress. That's what it was meant for. Okay? That's what it was meant for. So, all right, so let's get into the show, okay? That's the opening. All right, so look, and let's get into, I'm going to say one thing about financial stress and then I'll move on. Let's look at the cost, just the food at home. Eggs are up 16.4%. Roasted coffee up 14.8%. Beef steaks up 12.4%. Ground beef up 11.5%. Candy and chewing gum, right? 7.5%. Juices and drinks 6.8. Apples 6%. Fish and seafood, and I think this is about to go up because I saw a special. I saw reported on Bloomberg that we get the majority of our shrimp from India, and of course the tariffs are coming. We'll see, but I think that 5% will be greater. Bacon 4.6%. Oranges 4.4. All right, and I cut it off I cut it off at cookies, but this is just and the problem is that your paycheck didn't go up by 14.6%, right? your paycheck didn't go up by 14.6%. So because of that, you're behind the eight ball. I mean, I used to work as a financial advisor, and I would tell people all the time, like, hey, you have to invest because of inflation, right? Inflation had some issues. Well, actually, yes, it did. I remember from like 2006, the cost of housing just went crazy from like 2005, 2006, before the crash, 2007, 2008, right? So we're at that period again where inflation and salaries aren't keeping up with that. 14%, you don't get a 14% raise, right? And look, I'm not bashing. I love my money from my employer, right? I accept it, I appreciate it. The ability to earn dollars is a pleasure, right? To work and that work turns into dollars that you can invest, that is a gift, okay? Because we have the reserve currency of the world. But it's up to us and our first fruits, right? Having that principle of the first fruits, not letting this economy bully you and get access to your first fruits. All right, this is what I'm going to be on, this first fruits thing. And because tomorrow you can make a decision. Like, make a decision instead of spending on whatever you spend on, finally open up a brokerage account for yourself and your family, also opening and also giving a portion of it, right? Right? And through that you fight that financial bully that's increasing eggs by 14.6%. That's crazy. But it's the world we live in right now, and you have to be an investor. There's two worlds. There's a salary world, right? Which is fine. If you have a job, that's great. You should appreciate it and do what you can. But it's up to you, right, to make a decision that you're going to take the money you make from your salary and take it into the investor world, right? But we're not discussing retirement. We're discussing managing our portfolio and becoming our own portfolio managers. And when we do that, right, we can earn money and we can put that towards our household income, right? But we have to build it up first. It takes a little bit of time, maybe a year of your time. You'd be surprised if you dedicated a year and use the first fruits method and putting your income and putting your investments and your giving first, how far you come. But it's not easy because once you get stuck inside the system, meaning payment system, right? You get stuck inside the payment system and you know you had to pay those bills. It's hard trying to find. And then it just doesn't stop there. You get your car note, but then you got car repairs. You have a house mortgage, but then you got mortgage. We just spent $1,000 on some small repairs in our bathroom. We had to upgrade the fan, and our shower went out, and the faucet was leaking. So we just spent money doing that, right? But so once you get in that payment system, it's not just the payments, right? And then it's the inflation of the labor, getting somebody to come, right? The cost, they know the prices, their prices have gone up, so they have to charge you more. So you have to fight that bully back. You have to enter the investor economy, right? To take your finances to the next level. All right. So let's get into the charts. All right. So Dow Jones Industrial Average. Look, I pointed, I have an arrow. Okay, I have an arrow there. So this is called a flag, right? And this could be a bull flag or it could be a shakeout flag. All right. So the flag is there, right? It looks like a little flag, a pole and a flag. And the flag is there. And you kind of really don't know because it could be, going as you see right before that uptrend in the Dow, it was a little up and down. So that's called building, the foundation, right? And it built the foundation. And then once the foundation was built, right, then it took off. So we could have another foundation, but you see, before the foundation, there was a shakeout, right? There was a shakeout. All right. So we're beginning another process again. So we're kind of entering, and I'm gonna get into this in the back end of the show about what I think. what's going on and what's going to happen. And it doesn't matter. I'm always invested in the market, sometimes heavier than others, but I'm always invested. I put in option plays, and that's what I'm going to do. The free club. I don't know if I'm going to put options in the free club, um, but basic, basic for people who want to have a portfolio that works, that can use, and it'll be absolutely free. All right, the S&P 500. So it's funny. The thing about it is August. The beginning of August is usually a bad week. Maybe the first few days, but we started off with rocket fuel. All right, so you see, we started off at 62.38, and we're now at 64. Close today, 64, 68, 54. So yeah, so August is typically not a very good month. I mean, it's okay month for return. No, actually, it's not an okay month. It's usually a pretty bad month, right? But September, that's why you always have to be invested. But at times you need to be more invested than other times. So this is one of those times, and the Nasdaq is also forming that flag, also, right? We have that flag, 21,773. So once again, it could go up or down, and I'm going to show you how I think going up or down. Okay, and one more chart, the Nasdaq, the daily. Man, it was up and down today, but it stayed around 21,710 where it close to ended. It was below that, shot above that, but that was like the midline today. So once again, we're like in an indecisive market or a consolidation period in the market, and I think that we're we could go either way. So we'll see. All right. So all right. So this is why I could go either way. So the Jackson Hole annual retreat of the Federal Reserve Bank, they're meeting on August 22nd. And basically we're going to try to we're going to try to see the language Powell is going to use. Remember, language determines environment. Language determines positive or a negative environment. So this will be a positive, negative environment that after August 22nd, after Powell speaks, we'll see type of stock market environment. Whether he's going to be dovish and say, "Hey, yes, we're going to cut," or is he say, "I think we're going to, we're fine where we are." If he says fine where we are, that flag is going to be a shakeout, all right? But if he says we're going to cut, all right, then that flag will be bullish, all right, and we'll go to the next level. But like I said, Trump has been on Powell about are we going to Trump has been on Powell about are we going to he wants lower rates. But understand there's those two personalities, right? You have the very structured person and a very demanding person. The structure is going to stay with the structure. The demanding is going to try to get what their goal. Okay. So you have the battling of these two philosophies. So we have to see what happens, right? And because we're coming up on September, I think there will be a little turbulence there, which is fine. Like turbulence is fine. That's where, like I said, I haven't. I'm not heavily in the market. I am. I mean, I didn't add. I'm always invested, right? Always invested more times than other. I haven't added really. I added a few positions actually this week, option plays, and added to my dividends. And so we'll wait and see. And from that meeting, we'll know whether we'll get some better opportunities to increase our income as well as increase our options, which accelerate our income. So we have, dividend, consistent income, but options accelerate our income, take our income, 5x, 10x in a month. We can do that with options, right? But nothing's guaranteed. Options do involve risk. So that's it is to cut or not to cut. All right. So look, stock market spotlight. Let's go to the next one. All right, so the next section. All right, so company we're going to spotlight is Bullish. They just went public. BLSH, quick summary. Okay, look, let me say this first. I am not recommending this stock yet, maybe not even for the next 6 months, okay? But, if you're a trader already and you're savvy, you can't do options on it yet. But you want to buy it and maybe because it will probably go up. Of course, on the IPO went up 50 something percent. And it will probably track up, but it will once it hits that point and insiders start selling, it will crash, just like all the other IPOs have done. But you can ride it up, and you could and this, like I said, this is risky. Okay, you can also have puts on it. Okay, but I'm not recommending bullish right now. If you're a beginner, or you just have, if you just have some extra money and you want to bet, hey, have at it. I was looking to put, of course, couldn't put options on it right away. So I was looking for something different. All right. So the company IPO, the Bullish is a cryptocurrency exchange and owner of CoinDesk, backed by Peter Thiel. It debuted in the NYC under the ticker BLSH on August 13th, which initial public offering of $37 per share, up from projected 32 to 33. That says demand, right? There's demand for it. All right. So the first trading day volatility opened at 90, spiked to 118, and then settled near 68 to 70 at close. So you see the volatility in the stock, very volatile. All right. Go to the next slide. Operational signals, investor sentiment. The company reported 78% year-over-year growth. Now, this company initially was a SPAC. If you remember the whole SPAC craze, maybe about a few years back, and they had all these SPACs, right? These companies that basically were not making any money, and they just bring them public. And it was SPACs were an easier way to bring stocks public and raise money. And a lot of these, 90%, I think, of those SPACs went out of business. So this one was going to raise, but they didn't bring it public. So one good thing about it is backed by firms like BlackRock and ARK, invested up to 200 million purchase investors. And so analysts advise caution, emphasize the risk of FOMO, and recommending disciplined strategies to retail investors. All right. Once again, this is a risky play. So the final thoughts. Bullish IPO debut was spectacular, showing massive investor enthusiasm for crypto and digital asset platforms. However, the stock extreme volatility, right? It went up all the way up to 118, while it settled at 70 to 68. All right. So the risky play, especially for retail investors. If you're considering exposure to BLS, have a measured approach, which is clear risk management, right? Risk management is real important in investing. And if you like deeper insights, comparison, similar IPO sentiment, talk to me. All right. Finish yet? I am about to close the club, but look, I am opening up a free Discord. Okay. And from now on, I will not be streaming on Facebook, strictly streaming on YouTube. And I'll be posting clips on Facebook. So if you want to come to my YouTube page. So, but man, guys, great opportunity. We're in that range of indecisiveness, but I just think that within the next 2 months, if we decide to put money aside, we can still invest, right? If you have some ETFs, VOO and QQQ, I mean they can still lose money, but because it's a basket of stocks, the drawdown won't be as much. So you can add to your, but we'll see what happens at Jackson Hole, the retreat for the Federal Reserve, and see what's said, see the communication that comes out, and see the response from the president, which he will respond to it. and we'll see where we are. I think that we're going to have some volatility in what we do, right? So we'll take advantage of volatility, and that's what I will have in a club, teaching you how to take advantage of the volatility, having a portfolio that you can work through. It's very simple, right? So you can start out, and then of course we'll move from there. All right, man. It's always a pleasure, man, to thank you guys so much for giving me a few moments of your time. So look, always remember, tomorrow you get paid first fruits. Put money into that brokerage account. Put it in the brokerage account. And until next week, God willing, have a good one. Bye bye.